Thanks for joining us for another edition of The Small Business Show with Jim Fitzpatrick.
Hi everyone, Jim Fitzpatrick. Thanks so much for joining me on another edition of the Small Business Show right here at ASBN.com. If you're a small business owner for any longer than a day, maybe a week, you know that taxes can be problematic. If you're a small business owner, you're an entrepreneur, this is something that has to be at the top of your list. You've got to pay attention to this because it gets so many small business owners in trouble every year. So today we're very happy to have with us Alyssa Maloof Whatley. She is a tax attorney here in Atlanta, and we're so happy to have her with her. We're going to throw some questions at you because this is an area, right, Alyssa, that small business owners get in trouble every year.
Yeah.
Right?
Unfortunately, as a tax attorney, I see people who have either failed to hire a professional or tried to do it themselves, or hired the wrong professional, which is extremely frustrating for taxpayers because when you hire a professional, you assume that they're going to do the right thing. And so sometimes picking the wrong person or not picking a person can end up being more costly. And sometimes it's a cost thing for people. Well, I don't want to hire a bookkeeper. I don't want to hire a CPA. I don't want to hire a professional to file these forms. And it ends up costing people more money in the long run.
That's right. That's much, no question about it. And so talk to me about what you do. When are you actually brought in as a tax attorney? Because, when you think about small business owners and taxes and what have you, which I'm always thinking about, you think, well, I've got a good accountant. I've got a CPA. They're on the case and they're going to take good care of me or what have you. And I don't necessarily think I need a tax attorney. So at what point in time do I say, I think I do need a tax attorney? When are you actually brought in?
Yeah, so there's different types of tax attorney. I specialize in what's called tax controversy. So that means you have a dispute with the Internal Revenue Service or Georgia Department of Revenue. So a dispute could be anything from an audit. So you could get a correspondence exam where a letter comes in the mail. You could get a field exam where a revenue agent shows up at your house or place of business and wants to review your tax returns and your substantiation. And then those lead into tax court. So as a taxpayer, you do have a right to challenge the federal government. They can't take anything from you without giving you rights to due process. Your due process, though, comes in the form of the mail in which you actually hope to open the letters, right? So step one is people are like, well, I threw the letter away. It's like, well, you threw due process. It's gone now.
Oh my gosh.
You got to open the mail. So those audits could lead to a situation where you have a right to challenge the government tax court.
And maybe even in a certain period of time.
Yes.
Right?
There is 90 days generally to challenge the government tax court. And so filing a petition on time matters so you don't lose your rights. That would be a time to get an attorney involved. The other thing that we do a lot of dispute work with would be collections. So you owe a liability to the government and you can't afford to pay them or you don't want to pay them. That's another situation. And so we have to get involved stopping wage garnishments, bank levies. I have a client right now who's actually facing a seizure of primary residence that happens to be a very large farm. They can seize assets, things like that.
Could that have been avoided if it was done properly prior to?
Right. So that in that particular case, that taxpayer came to us actually after the seizure was already started and we got it released and then, things like that. If you don't do what you're supposed to do, they will continue doing what they're allowed to do. So having an attorney is helpful in stopping those actions, but the taxpayer is always so required to do the things necessary to rectify that situation. But yes, that particular case stemmed from an improperly filed return that had an audit. And at this point, the tax is almost so old that it's unable to be fixed because the records are lost, destroyed, or not able to be put together enough to challenge that assessment. And they didn't challenge the rights in tax court. So yeah, you can see, and it's, over $1 million. So
oh my gosh,
a bunch of missteps along the way have now led to a really disastrous situation that there's many points in time where intervention
they could have
had something and maybe been able to fix it. So a tax attorney is really good for defending against an audit situation, an additional assessment from an audit or from a collection activity. And it's employment taxes, it's income tax, and in the case of Georgia Department of Revenue, love them. Sales tax, they'll come padlock your doors and
I've had questions later.
Yeah, well, restaurants, I've had many restaurants come to me. They lose their liquor license because if you don't pay your sales tax, you'll you'll lose a liquor license.
Oh
and
my
then,
gosh, wow.
we know that businesses, especially restaurant business, they make their margins really on alcohol.
Right.
The food is nominal.
Of course.
So if you take away somebody's right to serve alcohol, then you're really cutting into their profits and in turn hurting their ability to pay the taxes.
Yeah, the business is it's shut down.
Right.
Yeah.
So that's when you'd use an attorney. But there's different types of tax attorneys. There's tax planning attorneys that can help structure deals. Like if you're getting a large settlement or you're selling a business, there are tax structuring attorneys that can help properly structure transactions to not avoid taxes, but to mitigate taxes or to reduce taxes or to do tax planning. So I don't do that kind of work. There's a lot of great people that do that work, but mine is more of in the event that something goes wrong. So there's a lot of ways to prevent that, which we're going to talk about for business owners so they never have to see me.
It would seem to me that if you got your small business owner, and I've been in, owning businesses for the last 30 years, and every now and then you get a letter in the mail that says, hey, you owe more taxes or what have you. You think right away, okay, I've got to get with my CPA or I've got to get with my accountant.
Right.
When in reality, to your point, if it's an appointment for them to come out to see you, you really should have an attorney there, not necessarily a CPA. Right?
Yeah, I think CPAs, accountants, even enrolled agents are people that are licensed to represent taxpayers before the IRS. All of those people are very helpful. I'm not a CPA. My job is to use legal arguments to defend a position, right?
Sure.
So in a case of an audit, it's whether or not something is ordinary and necessary. Right? Sometimes that is a legal argument because what's ordinary and necessary for your business obviously might not be ordinary and necessary for my business.
Okay.
And so each taxpayer is based, their results can be based on their own facts and circumstances and the documentation they have. So accountants are generally, and CPAs are generally number focused, right? They're not advocacy focused or writing legal opinions, because a lot of times we're arguing about the validity of something and why someone's facts apply to this law.
Okay.
But I do use CPAs in my everyday practice. I have great relationships with them. And so if it is a calculation error or a math error or form, we do bring them in to get the numbers right, to get the cost basis right, to get the balance sheet right, that type of thing. Sometimes we work in conjunction. If it's a simple letter that you get from the IRS and they say, oh, it's a math error, or you may have left something off your return, I would first, definitely recommend visit whoever prepared that return and have them review that in conjunction with what they filed.
Okay.
If it's a field agent situation, that's generally a more serious exam.
They're coming out to see you.
They're coming out to see you. It's for a reason.
That's right.
So that might entail legal counsel from the beginning, so that way you don't back yourself into a corner. We see, again, with tax returns, like I don't want to spend the money to hire a CPA, and they'll go on TurboTax, or my fear's like, well, I did it on TurboTax, and all the buttons said I could say yes, and it's like, well, I mean, TurboTax uses conditional logic.
Sure.
So if you say yes to one answer, it will lead you to the next path. And if you answered one wrong question, you will end up on a path that was not meant for you.
Right.
Because it uses conditional logic.
So gotcha.
You got to be really careful with the online tax preparation. If you have a simple thing like you're a W-2 employee, that's your only thing. You don't have real estate, you don't have a business, you don't have investments. Yeah, that's probably
a way to go.
Pretty simple.
Yeah.
And you can I used to do my own on TurboTax, but I mean, even myself as a tax attorney, I have a full-time person that does my bookkeeping and my financial statements. She sends them to me every month in a beautiful Loomly. I see the profit, the loss, the balance sheet. And I don't think you can be a good business owner if you don't have the data.
Right.
Because you need the data to make good decisions.
So let's talk about some of the areas that people get into trouble. Okay, the most common ones, the ones that jump out at you to go, if they had only done X, Y, and Z, they could have avoided all of this. What jumps out at you?
In an audit situation, there's really only two main things that I see with audits. And if you're a business owner, it is, let's say you're sole proprietor, that would be filed on a Schedule C, right? Schedule Cs are one of the most audited tax forms, because the government knows that people take certain liberties and they get a little, I've seen people go on TurboTax and write off like, $100,000 of mileage. And it's like, are you a truck driver? Are you a financial advisor? Like,
Exactly.
what are you doing for a living?
Right.
And we start to question, when you look at the Schedule C, it's like I call it blown out, a blown out Schedule C. Maybe you made $10,000, you got $100,000 expenses, and every single year it looks like that.
Yeah.
After a while, the government's like, well, maybe, something's not right here. And the thing is, the government has really great technology, and their data and data processing powers. They actually spent, I think it was like millions of dollars on technology that can scan returns and that can match bank account withdrawals and deposits from foreign countries, asset purchases. So the more data that the government collects, and the better that their algorithms become, and the better that their machines are at processing information, the more the audit risk will go up for people.
Right.
And especially if you're a small business owner, this is something you need to be aware of. People are always like, well, how did I get caught? And I look at the return and it's like, yeah, it looks like you should be audited. It's pretty obvious here. Like an example, I had a financial advisor one time write off $100,000 in mileage. It's like, no. Are you a truck driver?
Yeah.
Maybe.
Maybe.
Right?
Yeah.
But you're in the car all the time.
Yeah.
So it's what you're putting on the return. And so what that stemmed from was not actually having books and records to begin with, right? So if you were running all of your income and your expenses and doing proper accounting, and that's the thing, is people don't know what proper accounting is. They say, well, I transferred, I paid my Amex card, and the payment is an expense. And it's like, no, the payment to the card is not actually an expense. That is a transfer to a different account. The actual transactions on the bank statement are the actual expenditures that need to be categorized.
Right.
They don't know how the balance sheet works. So what happens is you have bad data, you go put that on the Schedule C, and then you run it through the computer, and it says, well, for this code or whatever type of business you're running, these numbers appear off.
Yeah.
This person's always having losses.
Right.
This category is extremely high. And it's always mileage. Mileage is one that people just go bonkers on.
Yeah.
I don't know if they don't think they're going to get caught. But
yeah, right. Maybe they just think it's like an easy go-to or something, right?
Right.
Yeah.
And the other thing about mileage is, what I also find is, as technology advances, the arguments that used to work for tax attorneys is like, oh, my client's dog ate the homework, it got destroyed in a fire.
Sure.
Well, we don't have the financial
records. It's their first
records.
business. They've never done this before.
Well, we don't know where the records are. But as technology increases, think about this. And I think my husband gets really uncomfortable when I talk about these things, because I was an international affairs major and studied national security law. But the more government information that they have and the more data they collect, the more dangerous the IRS actually becomes to us taxpayers.
Sure.
And the more prepared you have to be, because the government doesn't have the burden of proof, you do.
Right.
Right?
Right.
And so that's what gets really, really scary, is they're going to be able to see all the income coming in. They're going to see all the expenses going out. And when you say, I don't have any of the records, and you're talking about mileage, there's 100 apps on your phone that can track your GPS, and they can see your car went from here, point A to point B, and B to C.
Right.
And so to say I don't have records when there's 100 mileage tracking apps,
Of course. Yeah.
it seems negligent.
That's right.
Right?
That's
That you weren't keeping up with it. Or, with the bank, people are like, oh, I can't access my bank records.
Yeah.
Well, most of everybody's statements
online.
are online now.
Right.
When you buy something at a store, I've even had it when I'm using my credit card and I put it in the machine, it already sends an email based on the card that I used with the receipt. So you don't have the invoice for this to substantiate this business expense. So people are like, well, it should be easier to offend people. I was like, it's actually getting harder.
Yeah. Wow.
Right.
Because of all that data that the government's got on you.
Right. And
Right.
everything that we do in society now is being tracked or traced in some form or manner.
That's right.
And so putting things on the internet, purchasing things on the internet. Well, how did you get this? Or what were you doing with that? I mean, I've seen that in audit situations where, I said I have a lot of professional athletes. I've got famous entertainers.
Sure.
And people post things on social media.
Right.
Here's me in a private jet. How'd you pay for the private jet if every single year you have losses on your returns?
Right.
How did you pay for that?
Right.
So there's also like lifestyle analysis.
Sure.
If this is what you're
And
reporting,
by the way, are you saying that the auditors and the agents from the IRS will look into social media?
they can. They're not supposed to, but then they can get authority to do that. They are spending a lot of money to match, to run through social media, to run through property records, to run through bank data, and put all this stuff together.
There's no secrets.
It's just going to be harder.
Sure.
And so as a business owner, you have to be prepared, and you cannot rest on the, well, if I ever get audited, we'll find the receipts then. It's got to be a daily habit.
Yeah.
The first thing comes from having books and records, having accounts set up,
Sure.
having the accounts tracked
Sure.
and properly recorded, to then take that information and put it on the form. The second thing I see in audits, besides having bad data, is you have bad data, but then you also don't have receipts and substantiation to back it up.
Right.
That's what I was talking about. So
Right.
even like when I'm at a tax conference, you'll see me. I'm pulling out receipts. I had lunch for my team.
Right.
And
Take a
again, with
picture,
the phone,
something. Yeah, it's easy.
there's scan apps.
Yep.
You take it, you send it to an email inbox, and you download them all at the end of the year.
Right.
Right.
You got them done.
Yeah. So
Yeah.
there's just not as many excuses for not A, having good data, and B, having good records.
Right. Is an American Express, like a lot of people think, I put it on my American Express, so there's my receipt. I don't necessarily
That's the problem. Okay. So that's my favorite question.
Right. Everybody thinks that. I thought that for.
Okay.
Yeah.
Because what all an Amex statement does is show me what? That you bought something and where
Right.
you bought it from.
Okay.
So I always give this example because I'm a mom and it's an easy example for
Sure.
people to understand. If I go to Target, I have 2 kids, right? If I go to Target and I buy ink for my law firm or I buy diapers for my baby, will you be able to tell that from my Amex statement?
Probably not.
What I bought from
Right.
Target.
It's just a dollar amount that says
Right.
at Target it was $89.
So we've got one half of the equation of deductibility,
Right.
which is that you purchase something, you
Okay.
can see proof of the payment.
Right.
I don't see why it's ordinary necessary to your
Okay.
business. And so
Okay.
that's why an itemized receipt is so important.
Okay.
Because we're arguing about whether or not what you purchased at
Sure.
Target applies to your business. So again, if I bought the ink, I'm good to go.
Sure.
If I bought
What
the
about for
diapers,
business owners that say, well, I use my American Express or maybe I use my gold corporate card or whatever, and anything that I put on there is for business. That's why I do it. Whether it be a gas station or I go to Publix. I bought, donuts for the company here. I bought, sodas for our guests or what have you. Is that acceptable if you say anything that's on that card is a business expense?
Well, I would say no, because again, if you have a business, we're supposed to be keeping everything separate anyways, right? You have a business account and a personal account. You
Yeah.
should never be commingling. And even on the credit cards, I would say it's not a good idea because it makes for difficult accounting.
Sure.
I think it's still, because you as a taxpayer have the burden of proof, you can say that, but your words are what? Your words.
That's right.
And the government says, well, we don't think that that's true.
Right.
Then how do you further substantiate that?
Right.
It's like, well,
Right.
this is what we bought. Well, how many donuts are necessary? Right? I mean, donuts, I think you'd be fine.
Sure. But if you had that argument, so everything on that card is for business, they might look at it and go,
they're still going to ask you to come up with actual, and there are certain categories of business expenses that have strict substantiation requirements. One of those is auto expenses. There's strict substantiation if you're not using the mileage method, you're using the actual method.
Right. A lot of people ran out and bought G-Wagons and Range Rovers and at $100,000, and they're like, I'm writing the whole thing off.
It's TikTok's fault. I'm just going to blame it on TikTok.
We've all seen those TikTok and social media posts where it's like, let your company buy your vehicle.
Right.
You can write the whole thing off.
The whole thing off. It's no big
Right.
deal. It's and you don't even have to prove 100% business use. It's like, well, you do. And you have the burden of proof. But it's the same thing. You would just still want to keep the receipts. Like the donut example, donut's probably very reasonable because it has to be ordinary.
Okay.
So again, what is ordinary? Is 100 donuts ordinary? Is 10,000 donuts ordinary? Right. So you can see what the arguments the government can make, and then me defending taxpayers. Well, yeah, 10,000 donuts are necessary. We have 6,500 employees, or whatever it is.
Whatever it is.
Everybody needs 6 dozen donuts. It's totally normal.
Sure.
But meals, that's one where it comes up a lot.
Yeah.
Whether the meal is deductible, right? Did we have I think I was watching Shark Tank and Mark Cuban bought I don't know, it was like $1 million bottle of champagne or something. It was something ridiculous. Now, was that ordinary and necessary in a business expense? I don't know. The government might say, no, I don't think that's ordinary and necessary, right? And so meals are one where if it's a lavish meal, if it's extravagant, they might challenge you on that.
Right. Now, meals, if I'm not mistaken, they're 100% tax deductible?
That was for, during 20 and 21.
Okay.
For to help out the restaurant industry.
Right, not 2022.
Right. So I'm not sure if it's gone back or if it's still through 22. I'd have to look.
And then even at that, it's 50%, right?
Right. And generally the thing with meals is if you're eating by yourself, right, that's generally not tax deductible.
Okay.
Unless you're on a business trip. So if you're away from your place of business,
okay,
100%, that is deductible.
Right.
If you are with coworkers or it has a business purpose,
sure,
right, in that case,
sure,
that would be deductible. So I would have people on Schedule C's writing off, like they have a W-2 job, and then they would write off their meals at the cafeteria at their W-2 job and on their consulting. And I was like, that's a tough sell.
Sure, sure. So what I'm hearing is for small business owners and entrepreneurs, and we want to have Alyssa on more to bring us these tips, but if you're starting out, make sure you keep two separate accounts. You've got your personal account and you've got your business account on your credit cards, your checks, whatever it might be. And as a small business owner, when I started out, I mixed it all together and it got me in trouble. Do not do that. Bad advice. Or to do that, make sure they're separate. The other thing is keep records. When I say records, I mean receipts. Everybody takes that receipt, throws it away, and that you're throwing away the answer and the key to your freedom, right? With the IRS. When they come in and they go, great, we love what you're saying, just show me the receipt. So to your point, take a picture of it, boom, I got it. It's going to be sent to my email address, and it's done. So as much of a case that you can make with that IRS agent, whoever it is you're speaking with, the better off you're going to be, right? And when you show that, it shows that you have that characteristic of, hey, I'm covering things and I'm doing them right. But when you walk in and go, I don't have that, I don't have this, we didn't do that, we merged the two accounts together, sorry about that, then they just go, oh, now there's a lot more to look into, right?
Right, the can of worms starts to open, like you said. So a lot of times in audit, they'll send you and say, we're going to look at 4 or 5 categories. We're not looking at the whole return, we're looking at these 5 things.
Sure.
And when those 5 things aren't right, then like, well, maybe we'll look at 10 things. And then maybe we'll look at 15 things. And then maybe actually this year's just all bad. Let's go look at other years.
Right.
And then that's when it starts just getting really bad. It's because, again, they don't have the receipts, they don't have the records.
Sure.
For people that have more sophisticated businesses on here, like let's say you have a C Corp. I have C Corp exams right now, which are, they're taxed at a corporate level. And then when they take money from the business to the individual, they're also taxed on that personal level. Okay. Most businesses, small businesses are S corporations, which means they only have one level of tax. Right. It flows through on their personal tax return, and they pay tax at that level. So what I've seen in a lot of the C Corp ones is people, the owner of the C Corp will try to take a loan from the business. Right. Because a loan is not income to them. Right, that's right. Right? But if you don't properly document that loan, you don't pay the right interest rate because you do have to pay a minimum federal interest rate.
And actually have a loan document,
A loan document
that says
with
here's the
interest
loan.
rate. We need to see payments coming to the business. We need to recognize all those things on the balance sheet and on your personal, see the transactions of the money being paid from the personal to the business.
The good news is it's legitimate. You can take money and not pay. However, you got to cross your T's and dot your I's.
Right. And so that's my thing with tax planning. If you were going to take a tax strategy, you got to go all in with the strategy. Right. It's fine to do it, but you want to make sure that when they come to ask you, oh, is this a shareholder loan? Sure. Here's the loan document. It's actually, we have a security interest in my home if I don't pay it back. Right. Here's the interest rate. Here's here's the amortization schedule. Yeah. And when you don't have those things, one of the audits I have right now, they're like, well, we don't have those things. And they only reported they made X amount of money. And so how are they living on X amount of money? This is really disguised income. Right. Right. That's right. And so that's when we start getting in trouble. So it's having good data, keeping records, and if you're going to take a strategy, you need to make sure that all the requirements of that strategy, for example, the shareholder loan, you talk with a CPA or a tax professional, and then you have all the, cross your I's and dot your T's, of all the documentation to back that up, just in case. Right. Absolutely. If and when.
Alyssa Maloof Whatley, we're going to keep you here in the company. We're not going to let you go home because we need somebody like you. Tax attorney, law offices of Alyssa Maloof Whatley. Check them out online. This might just be the person that you need in your corner when you get that letter or that phone call. So thank you so much for coming in. This has been great. We'd love to have you back in to maybe drill down on some other tips and I don't want to say tricks of the trade, but some tips that you can share with small business owners. So thank you.
Yeah.
Thanks for joining us for another edition of The Small Business Show with Jim Fitzpatrick. This has been a JBF Business Media production.